So, looking at the Aussie dollar, and what we're talking about in particular is secondary indicators and how they apply when you are looking to take a trade setup. So, using a secondary indicator, an oscillator, this is just a filter of price action. Yep. So it's only telling you what we're seeing on the chart itself. But the benefit of this is using those specific mathematical calculations, it can give us an early indication or a coincident indication of a potential setup. So, just to give you an example, a single meaning on the oscillator doesn't mean much. Yep. So what you want to do is you want to add a number of confirmations to your secondary indicator to gain better perspectives or better perspective. So most traders will just say, "Yep, this is oversold, so this is where I'm going to buy, and now this is over bought, so this is where I'm going to sell." Yep. And generally, if you're taking sort of a buy signal like this and a sell signal just like this is not enough to take a trade, in my opinion. Yep. This is a very simplistic view, and yes, if you bought here, you targeted the previous high, you would have achieved that level. If you sold here, yep, you would had achieved sort of this low, but not the previous low. So it didn't get back to the previous low; it did retrace. Yep. So the importance is when you have a trendy market, when markets are trending, overbought and oversold signals on the secondary oscillator, it doesn't work. It doesn't work. It does work when the market is ranging. When you're looking for a market that goes sideways, that is where overbought and oversold signal works. Yep. So that works for that. Yeah, but if I was looking for, okay, how do I get in on trades when we break a significant trend? So I'm looking for sort of this move here where price is trending higher, and I have a trend line in place, and I'm looking for the significant break. So I'm looking for this move to take place. I need a number of confirmations, and this is what we require. So yes, you can apply a trend line, you can apply support resistance to your trend, to your oscillator. So you can do a number of primary analysis on your secondary indicator. So the first thing is that the RSI is always based on closing prices. It's always based on closing prices. Yep. So look at the close of the candles. Give those more consideration. Yep. The second thing will be is so for confirmations. So to take a trade, once I've done my analysis, I'm looking for a number of confirmations, not just a single overbought oversold signal. So the first being, yep, we want to reach. Yep. So we want to reach the overbought or the oversold region. Yep. Second reason, and probably one of the best sort of early indications of a reversal, is divergence. So from this high to this high. So when price has gone on to make a new high, your secondary oscillator is giving you a lower high, which shows divergence from price. Yep. So that can give you an early indication that there's a significant amount of weakness taking place in that current uptrend, and we're likely due a potential retracement. And then the third confirmation is, yep, look for breaks of your trend line in this case, and your fourth confirmation, the break of that previous low in this region here. And then your final confirmation may be the 50% level. So when we break through this 50% handle over here, and the 50% handle is seen as your balance line, so it's the middle point. So anything above 50 showing more buying pressure, anything below 50 is seen as more selling pressure. So this will potentially finalize that, yep, we're in a potential now bear market. Okay, so I'm not saying to apply all 5 confirmations. What you need to assess is, okay, if I just use 1 and 2, is that enough for me to take a trade? And you take a trade based on that. If you've seen over a number of trades that doesn't work, you require more confirmation. Then you apply 1, 2, and 3 to potentially take a trade, or 1, 2, 3, and 4. Yep. The last case scenario, the most confirmed signal from a secondary indicator is using 1, 2, 3, 4, and 5. Yep. So that covers how to use a secondary indicator, an oscillator, with additional confirmation.